All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. All right, I'm just going to wait just a moment here for the thumbs up that we're live. I'm not getting my normal alert here, so I want to just make sure that things are rolling here. My apologies for the delay. All right, we're good. All right, fantastic. All right, let's get to it. Challenge. We have J.P. Morgan. We have GOLD Barrick Gold here that we entered yesterday. I put the prices that they were just before I got on video, and puts the challenge just over 4,000. So okay, great. Nice to see, but looking for more. Looking for more here, and maybe that's greedy, but hey. The old adage, greed is good on Wall Street, I guess. We'll apply it here. But bottom line is both stocks remain within parameters, and we'll continue to run with them. Now, J.P. Morgan does come up on its auto exit date here this afternoon, and it's one where the stock is in a very interesting position, as far as where it's at and what it's doing. It's getting the trend action, right? It's taken a little bit, but it's getting that action. Last challenge, we had a 6 day, for the green trades. This challenge 5 days. There is a chance that I will hold J.P. Morgan. And why is that? Well, because when we look at the difference between 5 days and 6 days on the green stops, the green time stops, there's not a lot of statistical difference, right? So it's one of those where I'm not altering the odds in a great way by holding it. Now, it's also one where, if we have some signals come in this afternoon, do I pull it and go get after a fresh signal? Probably. Okay. But we'll see kind of how the signals shape on up. But it's not a 100% certainty that I'll exit JP Morgan here. This afternoon, I'd like to see it close near the highs, to hold it. But again, that's probably not all that important. It'll probably come more down to, is there another signal to go after or not? And then GOLD up about 8 cents here this morning. Not doing a heck of a whole lot here. As it sits, we have gold that's down here today, but the gold miners are outperforming gold here a little bit. And Barrick outperforming the gold miners here just a little bit here this morning, though they're all kind of off their highs here just a bit. All right. So any new signals? Nothing new. We have two downside crossovers: Facebook and Procter and Gamble. Now we got knocked out of Procter and Gamble yesterday. We can see it's down about 1% here today, and something that I like to see because I'd like to get back into it. And an upside crossover would give us an opportunity to get back into it. But as it sits, it has a downside crossover. Chances of being a downside signal are almost zero with it coming off of a new high. So nothing really there potential wise today. Facebook has a downside crossover on it here. But very limited chance that it signals. There is some chance that it signals, but not a very high one. On the upside crossover list here, though, we have a few more than on the downside list, and these include Caterpillar, Dollar General, Nike, Schlumberger, Valero. Now, Nike, and I'll come back to this, Nike, one of their big competitors, Under Armour, had earnings here today. We'll go take a look at those earnings here in just a bit. But, it's almost one of those Under Armour paying Nike gain, maybe. And when you look at what's going on with Under Armour, you could kind of make that argument. But both of them do have a little bit of overhang with the coronavirus there. But anyway, Caterpillar. Nice little 3-7 crossover on it here today. I'm very curious to see if this signals. It is coming off of a higher low, so it does have the chance to signal there, but we're dealing with a strongly downward sloping 20-day moving average, which when you look at, some of the recent runs that it has made, its crossover has happened in this type of environment. So, because the algorithm is stock specific, we could see it trigger. But we'll kind of see how that plays on out. Cat oftentimes moves along with some of the oils. You'll notice Schlumberger, its chart is almost identical with the upside crossover today. Valero has an upside crossover today, but almost zero chance of Valero triggering. Here today. And then we also had, Dollar General, which has just been mired in this consolidation, right? We traded it. We had a nice signal on it. Ended up getting knocked out. And it looked like it wanted to go a little bit later. Came back down. Now it's just still at that 156 spot. And there is a good chance that it does trigger here this afternoon. And if it does, I will definitely look to go after it. But consolidation risk a little too high here in the morning. So anyway, those are some of the crossovers and some of the potential signals that could come in here this afternoon. Now, I mentioned Under Armour, and Under Armour here down pretty good, down about 17% on their earnings. And if we kind of look at this from a longer-term chart perspective, a weekly chart, you can kind of see it's back in its restructure days, right? Under Armour went through a big transformation, big restructure, and they were supposed to emerge out of that and do really well, and they did for a while, right? They did for a while. And then last year, we saw an earnings report come out from them that kind of showed that things aren't going all that well. And today's report confirms it. Things are not going very well. They had to lower their guidance for the year. Here's a monthly chart. You can kind of see what it looks like. But had to lower their guidance, possibly canceled their construction plans for their flagship store in New York City. So some kind of, some ugly things that you can't put on the coronavirus, right? Yeah, some of the miss in future guidance is due to the coronavirus, but, not all the negatives in the report are coronavirus related. This is going to be a bad report regardless of coronavirus or not. And, when you look at companies that could be, affected strongly by the virus, Under Armour is certainly one of those. Now, when we come in and we look at some of the comparables, right? Because when we have a stock that tanks like this, one of the things that I always like to do is just look at what their comparables are going to look like going forward. And more so on the revenue side than anywhere else. And it's one where the comparables are pretty easy, right? A year ago, 2%, 1%, 0% last quarter revenue growth. And, these numbers haven't been, drafted down, but we saw basically Under Armour come out and say they're going to have negative revenue growth. Easy comparables are great, but when you're projecting not to be able to hit them, it's a whole different story, right? We talked about the easy comparable story with IBM, and very realistic for them to hit it and expected to hit the easy comparables. Under Armour, they're kind of expecting to miss the comparables, even though the comparables are fairly easy. So, is it too early to expect a massive turnaround? I expect so. I think they're probably close to bottoming out. But to see kind of one of these elements where it bleeds on down and then comes right on back to where it is now ahead of the next earnings season, is something that I would not be surprised to see. I would be surprised to see it completely fill the gap like it did last earnings season, right? When you have, now a third quarter of a massive miss, the chances of filling that gap become significantly lower. But to see it bleed on lower, come back to these levels ahead of next earnings, I would not be too surprised to see. And so the bar is low for Under Armour. Right? The bar is low. It has been lowered, but there's no sign that they can clear this low bar. And so, as you kind of watch Under Armour in how things unfold in the coming months, if there are signs that they can clear this low bar, the stock's going to have a really nice uptick. Without that, though, we're not going to see major buying, come on into it. And, ultimately, investors are going to favor Nike over Under Armour, even though Nike is significantly more expensive on many of the valuation metrics there for it. Okay. Alrighty. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you this afternoon. Take care.